All right, so today we're diving deep into Rich Dad, Poor Dad, which has been like a huge deal in the personal finance world for ages.
Yeah, millions of copies sold. It's definitely made an impact.
And I think you're interested in getting to the heart of what it's all about, the main ideas.
Without getting bogged down in all the detail.
Right, exactly. So we'll break it all down for you how this book, even with, some controversy around it, really changed how people think about money.
Yeah, it's interesting how Kiyosaki uses his own life story to kind of set the stage for all these financial ideas.
Yeah, like with the two dads.
Right, he learned about money from two totally different father figures. His own dad, the poor dad.
And his best friend's dad, who he calls the rich dad.
Exactly.
And those weren't just like nicknames or something, right? I mean, their whole views on money were completely opposite.
Oh yeah, totally different philosophies. One thought a good education and a stable job were the key, while the other was all about financial independence.
So Kiyosaki had these two living examples playing out right in front of him.
Yeah. And it wasn't like he was saying one was right and the other was wrong, but seeing those two different approaches in action, he started to, form his own unique perspective.
It's wild to think about. He basically had this real life experiment going on in his own family.
Yeah, and even as a kid, he was already trying to be entrepreneurial. I mean, he and his friend tried to start their own toothpaste business when they were just 9 years old.
Wait, toothpaste? What do you mean?
Well, they came up with this idea to make their own toothpaste because they saw how much people needed it. But it turned out they were basically counterfeiting it, and his mom had to shut it down.
Wow, that's a pretty intense business lesson for a 9-year-old.
Yeah, definitely not your typical lemonade stand.
So I guess the big question is, did that experience scare him off from ever trying business again?
Not at all. They actually ended up starting a comic book library instead,
Oh, wow, that's cool.
which actually did pretty well for them. The important thing here is that these early experiences, both the failure with the toothpaste and the success with the comic book library, they kind of laid the groundwork for his later beliefs about, learning by doing.
Makes sense. He wasn't just reading about business in a book. He was out there actually trying things, making mistakes, and figuring it out.
Exactly.
And that kind of leads into one of the book's biggest points, the idea that traditional school doesn't really teach you much about money.
Yeah, that's a big one.
Think back to your own education. Did you ever take a class on, managing your personal finances?
Probably not. It's something that a lot of people feel is missing from their education.
You can be a doctor, lawyer, or whatever, super successful in your career, but still not have a clue about how to handle your own money.
Right. Kiyosaki argues that's because the system teaches us to work for money, but it doesn't teach us to make money work for us.
And that's where that whole asset versus liability thing comes in, which is probably the most famous part of Rich Dad, Poor Dad.
Those diagrams are so simple, but they really get the point across.
Yeah, assets put money in your pocket and liabilities take money out. It's so obvious when you see it laid out like that.
And it makes you rethink what you actually consider to be valuable, like a house, for example.
Oh, yeah, a house, everyone thinks that's the ultimate sign of success. But Kiyosaki says it could actually be your biggest liability.
Especially if it's, draining your cash flow every month with the mortgage payments and all the expenses that come with owning a house.
So it's really a shift in perspective. It's not about how much something costs. It's about how it impacts your overall financial picture, whether it's bringing money in or taking it out,
Exactly. And he used the example of a fancy car, too.
which for most people is definitely a liability.
Yeah, unless you're like a race car driver or something where your car is actually part of your business. It's probably just another expense.
Another thing he says is that rich people don't buy luxury items until their assets can pay for them.
Right. They build that financial foundation first.
That makes sense. It's don't put the cart before the horse,
Oh,
right?
exactly.
Which brings us to what he calls the rat race.
Yeah, the rat race.
It's that, soul-crushing cycle where you work harder, you earn more money, but you end up even deeper in debt.
You're just running on a treadmill, but you're not actually getting anywhere.
And it's so sneaky because it plays on our desire to have a better life. You get a raise, so you buy a bigger house, a nicer car. You're trying to keep up with everyone else, but you're actually digging yourself deeper into that hole.
Yeah, it's like a never-ending cycle.
Have you ever felt stuck in that rat race yourself?
I think most of us have at some point. The pressure to keep up with the Joneses is real.
So how do we escape this rat race? Kiyosaki's answer is to start minding your own business, which honestly sounds a little vague to me.
Yeah, it's not about quitting your job and becoming an entrepreneur overnight.
So what does he actually mean by minding your own business?
It's about focusing on building up that asset column, creating income that works for you, even when you're not actively working.
So things like passive income streams.
Exactly.
Hmm.
Like starting a side hustle or investing in rental properties or anything that can bring in money without you constantly trading your time for it.
So it doesn't have to be some huge, complicated business venture.
Nope, not at all.
No.
He even talks about how he started small, just like with that comic book library he ran as a kid, and then gradually scaled up as he learned and gained experience.
He even compares it to learning a musical instrument you wouldn't expect to play like a virtuoso on day one.
Right. It takes time, practice, and a willingness to learn from your mistakes.
Okay, now let's get into something that can make people a little uncomfortable: Kiyosaki's views on corporations. He's pretty outspoken about how the rich use corporations to, legally minimize their taxes and protect their assets.
And it's important to emphasize that he's always advocating for doing this legally.
Right, he's not talking about shady tax evasion schemes or anything like that.
Exactly. His point is that the tax code is complex, and those who understand it can use it to their advantage. It's like playing a game. If you know the rules, you can play it better.
So it's not about beating the system, it's about understanding how the system works and using that knowledge to benefit yourself.
Exactly. He wants people to be aware of these strategies, not so they can cheat, but so they can make informed decisions and potentially level the playing field a bit.
That idea of understanding the rules of the game seems to be a big part of his overall philosophy.
Definitely. And it connects to his focus on financial intelligence, which he believes is crucial, but often overlooked in traditional education.
And he actually breaks it down into 5 specific areas, right?
Yep, accounting, investing, understanding markets, the law, and spotting opportunities. He basically lays out a financial intelligence toolkit.
Which is cool because he doesn't just throw out these terms, he gives real examples throughout the book to show how these concepts actually play out in the real world.
Right, it's not just about memorizing definitions, it's about knowing how to actually use this knowledge.
He wants people to be able to not just manage their money, but make their money work for them. Speaking of real-world stuff, he also talks a lot about overcoming fear, particularly the fear of failure.
Yeah, that's huge.
He uses this powerful story about remembering the Alamo to show how everyone faces setbacks.
Right, he's saying that setbacks and failures are just part of the journey. The key is to learn from them and keep moving forward.
And he doesn't just say that, he really dives into how to reframe those I don't want moments, those things that scare us.
Like the thought of having to fix a leaky toilet if you own rental properties or dealing with difficult tenants.
Exactly, things that can make people hesitant to invest. But his point is that those fears can actually point us towards areas where we need to grow and develop new skills.
It's like he's saying that those fears can be valuable if we use them the right way.
So instead of running from fear, we should lean into it, figure out what's causing it, and address it head on.
Exactly. He argues that that's a key part of building confidence and achieving success, not just in finance, but in life.
This is great. I already feel like I'm looking at things a little differently.
That's awesome. That's what it's all about, gaining a new perspective.
So we've covered the different dads, the rat race, and the importance of financial intelligence. But how do we actually start putting all of this into practice?
Well, that's what we'll dive into in the next part. Kiyosaki gives some pretty concrete advice on what steps people can take to start building their own financial path.
Perfect. Can't wait to hear more. All right, so we've talked about some of the big, foundational ideas from Rich Dad, Poor Dad. Those contrasting mindsets, the whole rat race thing, the power of assets over liabilities.
It is this stuff.
I'm thinking now, how do we actually start putting all this into practice? Where do we even begin?
Well, Kiyosaki actually gives some pretty concrete advice. One of the first things he talks about is overcoming what he calls the tar baby.
The tar baby.
Yeah, it's like those sticky problems or those negative beliefs that kind of hold us back. That feeling of being stuck, like you're sinking in quicksand.
Oh, I get it. It's like those limiting beliefs we all have about money, or even just about ourselves.
Exactly.
Yeah.
And he actually uses the analogy of Brer Rabbit and the tar baby from those old folk tales.
Oh, yeah, I remember that story.
And his point is, the more you struggle against those negative thoughts, those limiting beliefs, the more stuck you become. So it's not about brute force,
So how do you get unstuck?
It's about outsmarting the tar baby. It's about changing your perspective, like challenging those beliefs that are holding you back and then, finding some creative solutions.
So instead of saying I can't afford to invest, it's about asking, how can I make investing a possibility?
Exactly. It's about shifting from a victim mindset to one of empowerment. Instead of blaming external factors, it's about taking responsibility for your financial situation and focusing on what you can control.
This reminds me of something else he talks about changing your perspective on work.
Right. Kiyosaki really emphasizes that even a job you don't love can be a valuable learning experience.
It's about looking for their opportunity in every situation.
Exactly. He says it's about seeing work as a chance to, develop skills, build connections, gain knowledge that you can use later on for your own ventures.
It's like he's saying every job can be a stepping stone, even if it's not your dream job.
Right. And he even uses the example of his own experience working for his rich dad for free. It wasn't glamorous, but it taught him a lot about business and finance.
So it's not about finding a perfect job, it's about learning as much as you can from whatever situation you're in.
Exactly. And he also makes it clear that it's okay to have a job while you're building your asset column. The key is to use that income wisely to, invest in things that will eventually give you more financial freedom.
Which brings us back to building that asset column. What are some tangible steps people can take to get started with that?
Well, Kiyosaki is a big advocate for real estate, but he also talks about stocks, businesses, even intellectual property. The key is to find assets that generate passive income. Money that works for you even when you're sleeping.
It's like having your money make more money for you.
Exactly.
He seems to really stress that you don't need to be rich to get started, right?
Absolutely. He talks about how he bought his first rental property, a small condo, for a relatively low price. And then, as that property started generating income, he used that cash flow to buy more properties. So it's about starting small, building that momentum, and then gradually scaling up.
So it's not about needing a ton of money up front. It's more about finding those right opportunities and using your resources wisely.
Exactly. And he emphasizes that it's okay to learn as you go. You don't have to be an expert right away.
This all sounds great, but I think a lot of people get hung up on the risk involved. What if I invest in something and it doesn't work out?
Well, he's very clear that any type of investing is going to involve some level of risk. But he argues that by building a strong asset column, you can actually reduce your overall financial risk.
Wait, how does that work? How does having more assets reduce risk?
Think of it like this. When you have assets that are generating passive income, you're not as reliant on your job for financial security. So, if you lose your job or if the economy takes a downturn, you've got that safety net.
Oh, I see. It's like having a diversified portfolio, but instead of just stocks and bonds, it also includes things like real estate, businesses, or other income-producing assets.
Exactly. And he talks about the importance of having a long-term perspective, too.
Yeah.
Investing is not about getting rich quick. It's about making smart decisions, managing risk, and then letting those assets grow over time.
One of the things that really stood out to me in the book is his perspective on home ownership. It's not that he's against it, but he really challenges that idea that your house is always an asset.
Right. He argues that for a lot of people, their house is actually their biggest liability.
Because it's this huge expense that eats up their cash flow and prevents them from investing in other things that could generate income.
Exactly. And he's not just talking about mortgage payments either. He also factors in things like property taxes, maintenance costs, and even the opportunity costs of having all that money tied up in a property that may or may not go up in value.
So it's really about taking a step back and looking at the bigger picture, not just focusing on that emotional attachment we have to our homes.
Right. He's not saying you should never buy a house, but he wants people to be aware of the financial implications and to make sure it aligns with their overall financial goals.
He also dedicates a whole section to developing your financial IQ, which seems pretty important.
Oh, absolutely.
Oh.
He breaks it down into those 5 key components we talked about earlier: accounting, investing, understanding markets, the law, and spotting opportunities.
And he stresses that these are skills anyone can learn, no matter their background.
Right. It's not like you have to have a degree in finance to understand this stuff.
He encourages readers to find mentors, take classes, read books, basically immerse themselves in the world of finance.
It's about taking ownership of your financial education.
And I love how he talks about those aha moments when you finally grasp a concept that seemed confusing before.
It's like a light bulb goes off.
And I think those moments are really empowering because you realize that you're capable of understanding this stuff and you can start making better decisions with your money.
Exactly. He believes that financial literacy is key to feeling confident and in control of your financial future.
Now, one of the parts of the book that I know makes some people uncomfortable is his views on taxes.
Yeah, he's definitely outspoken about that.
He talks about how the rich use corporations to legally reduce their tax burden, which can sound a little, I don't know, shady to some people.
And again, it's important to emphasize that he's not talking about tax evasion, which is illegal.
Yeah.
His point is that the tax code is complex, and it's written in a way that benefits people who understand it.
So it's more about using the system to your advantage, not about breaking the law.
Exactly.
Yeah.
And he gives plenty of examples of how corporations can be used legally to reduce taxes and protect assets.
One thing that really resonates with me is his emphasis on mindset. You know, overcoming those fears and developing that resilience to keep going even when things get tough.
Yeah, he believes that our thoughts and beliefs have a huge impact on our success, not just with money, but in life in general. He talks about the importance of challenging those limiting beliefs.
Like, if you catch yourself thinking, I'm not good with money or I'll never be able to afford that, he'd say, you need to question those thoughts and replace them with more empowering ones.
Exactly. And he also talks about how to embrace failure as a learning opportunity.
Not letting those setbacks get you down, but actually using them to grow and get better.
He compares it to surfing. You can't control the waves, but you can learn to ride them.
It's a great analogy for, well, for the stock market, but also just life in general, you know? There will always be challenges and setbacks, but it's about learning to adapt and stay focused on your goals.
He also talks about managing your emotions, especially when it comes to money. He argues that fear and greed can be huge obstacles to financial success.
Oh, yeah. Fear can keep you from taking risks that could pay off, and greed can make you make impulsive decisions that can wipe out your gains.
Right. And he even has this whole section on I don't wants. Have you gotten to that part yet?
Not yet. Tell me about it.
He uses that phrase to highlight how often people focus on what they don't want instead of what they do want. For example, someone might say, I don't want to deal with tenants as a reason not to invest in rental properties.
But by focusing on that I don't want, they might be missing out on the potential benefits of real estate.
Exactly. It's about recognizing those limiting beliefs and then challenging them. He wants people to focus on their I wants, their goals, their dreams, and to find ways to overcome those I don't wants that are holding them back.
So shift your focus from what you're afraid of to what you're working towards.
Right. And he also talks about those chicken little voices in your head.
Oh, you mean the naysayers who are always predicting doom and gloom?
Exactly. They might tell you it's too risky or you're not cut out for that. But he says you can't let those voices get in your head. It's important to surround yourself with positive, supportive people who believe in you and encourage your growth.
They're finding mentors, people who have already achieved what you want to achieve.
He's a huge advocate for mentorship. He says it's one of the fastest ways to learn and grow.
Now, this whole idea of paying yourself first is something that really stuck with me.
Yeah, that's a classic financial principle.
It's the idea that instead of waiting until the end of the month to see what's left over after you pay your bills, you should set aside a portion of your income for savings and investments before you pay anything else.
It's about making your financial well-being a priority.
It sounds so simple, but I think a lot of people struggle with it.
It can be a real mindset shift, especially if you're used to living paycheck to paycheck. But his point is that by putting yourself first, you create a powerful motivator to find ways to increase your income and build your assets.
So it's about treating your savings and investments as a non-negotiable expense, like paying rent or your utility bills.
Exactly.
Right.
And even if you could only start with a small amount each month, the important thing is to build that habit and let that money compound over time.
He also has some interesting thoughts on overcoming arrogance, right?
Yeah, he argues that arrogance often comes from a fear of admitting that we don't know something. And when it comes to money, that can be a big problem.
It can lead to bad decisions.
Right, because if you think you know everything, you're not open to learning. He talks about how he's constantly attending seminars, reading books, learning from experts, even in areas outside his core expertise.
It's about being humble enough to recognize that you don't have all the answers and being willing to learn from others.
He's a big believer in lifelong learning.
Now, in one section, he compares different types of investors, which I thought was interesting.
Yeah, he talks about the professional investor who carefully researches every detail.
Right, they analyze everything, pore over spreadsheets, and really take their time before making a move.
And then there's the investor who's more about taking action, who's willing to take risks and jump on opportunities that others might miss.
He tells a story about how he learned to spot those hidden opportunities. Like the time he bought this rundown house that came with like 4 extra empty lots.
which he then sold for a huge profit.
Exactly. It's about training your mind to see the possibilities instead of getting hung up on the limitations.
And he also emphasizes learning how to raise capital.
Mm.
Understanding that a lack of money shouldn't necessarily stop you from pursuing a good investment.
So it's not just about having money, it's about knowing how to access money when you need it.
Right. He shares stories about how he bought properties and stocks without having all the money up front. He used creative financing strategies, partnerships, things like that.
Yeah. It's about being resourceful, finding solutions, not just giving up when you hit a roadblock.
He also has this great advice. Make lots of offers. Don't be afraid to negotiate, even if your first offer gets rejected.
He says you never really know what the right price is until you start putting yourself out there and testing the waters.
And that applies to so many things in life, not just business or investing.
And then there's that great line, find someone who has done what you want to do. Like find a mentor, someone who's already walked the path you want to walk.
He really believes in learning from those who already achieved what you aspire to.
He tells a story about how he learned about tax lien certificates by finding a government employee who invested in them, and he just took her to lunch. She was happy to share her knowledge, and he ended up finding 2 great deals the very next day.
It's a great example of how being proactive and seeking out knowledge can pay off.
He also talks about thinking big, even if you're starting small,
Having that vision for what you want to achieve.
and looking for bargains in all markets, not just the obvious ones.
He points out that while most people might rush to the supermarket when there's a sale on toilet paper, they often shy away from things like the housing market or the stock market during a downturn.
Which is actually when a lot of the best opportunities can emerge.
It's about having the financial intelligence to see value where others might see risk.
And he talks about learning from history, pointing out that a lot of successful businesses started small, and even those who achieved great wealth often faced a lot of setbacks along the way.
Right. Success is rarely a straight line. It's about being persistent, learning from those mistakes, and never giving up on your vision.
One of the most important takeaways from Rich Dad, Poor Dad is this idea that knowledge without action is useless. It's about actually putting what you learn into practice, even if it's on a small scale at first.
He tells this great story about a friend's son who wanted a new car. And instead of just giving him money, they used it as a teaching moment.
They said, okay, here's $3,000. Figure out how to use this money to buy your car.
They challenged him to use that money to generate enough income to buy the car himself.
Which forced him to think creatively and learn about investing. It wasn't just about getting a new car, it was about learning valuable life skills.
It's a great example of how parents can use everyday situations to teach their kids about money.
And then there's this whole section where he talks about how money is often invented, which sounds kind of crazy at first.
He gives an example of buying a house for $45,000, using a $20,000 mortgage, and then immediately selling it for $60,000.
So in that scenario, he created $40,000 of value in his asset column without actually having to put up that much cash.
Right. It's a simplified illustration of how understanding financial leverage and market dynamics can be used to create wealth.
He goes on to share how he and his wife were able to create over $190,000 in assets by doing similar deals during a down market.
And he highlights how that income was largely sheltered through their corporation using legal tax strategies.
Again, it's about knowing the rules of the game and using them to your advantage. Now, we've been talking a lot about real estate, but Rich Dad Poor Dad also covers investing in the stock market.
Right. And he shares how he invests in those high-risk, speculative private companies that are about to go public.
He acknowledges that it's not the right approach for everyone, but he points out that with the right knowledge and strategy, it can be a way to potentially generate significant returns.
And he really stresses the importance of learning how to manage risk.
He talks about using tools like stop-loss orders to minimize your losses.
And to protect your investments.
And he shares an example of how he used a tip from a friend to invest in a small oil company.
That ended up striking oil.
And he made a big profit. It's a reminder that opportunities are often hidden in plain sight, and sometimes it's just about being in the right place at the right time and having the courage to take a chance.
But he also talks about overcoming that fear of losing money, which I think holds a lot of people back from investing in the first place.
He's like, look, losses are going to happen. It's part of the game.
Successful investors understand that. It's about learning from those losses and not letting them derail you.
And he says, don't try to time the market. Don't try to predict when to buy and sell based on short-term fluctuations.
It's about having that long-term vision.
He compares smart investors to surfers who are patiently waiting for the next big wave.
They're not just jumping in the water randomly, they're strategically positioning themselves.
They have the discipline to wait for the right opportunity. Now, Rich Dad, Poor Dad isn't just about investing in traditional assets like real estate and stocks.
He also encourages people to invest in their own financial education.
He's like, knowledge is power. The more you know, the better decisions you can make.
He talks about attending seminars, reading books, talking to experts, just constantly soaking up information about finance.
It's about being proactive, not just waiting for someone to tell you what to do with your money. One of the things I found most valuable about Rich Dad, Poor Dad is that it's not just about money, it's about finding your own path, defining what success means to you.
He talks about how his own journey led him away from those traditional career paths, like being in the military or working for a big corporation, and towards entrepreneurship and financial education.
And it wasn't always easy, but he found something that he was passionate about and he made it work.
It's not necessarily about finding a dream job, but finding something that aligns with your values and your goals.
And he talks about the importance of developing all aspects of yourself, mental, physical, emotional, and spiritual. It's not just about being smart, it's about being well-rounded and having that inner strength to face challenges.
He shares stories about how attending personal development seminars helped him grow as a person, even in ways that he didn't expect.
And he talks a lot about overcoming that fear of failure.
He's very clear that failure is a necessary part of the process.
He says, you're going to make mistakes, you're going to have setbacks, but that's okay. It's how you learn and grow.
He encourages people to reframe failure as a stepping stone to success.
And he also talks about surrounding yourself with the right people, people who will support your dreams and challenge you to be better.
Having a strong support system is so important, especially when you're trying to achieve something big.
One of the key themes that runs through the whole book is this idea of taking control of your financial destiny.
He argues that too many people just passively accept their financial situation, thinking they have no power to change it.
He wants people to question that conventional wisdom of going to school, getting a job, saving for retirement. He thinks that model might not be enough, especially in today's world.
He encourages people to think outside the box, explore different options.
Maybe start a business, become an investor, find a path that creates more freedom and security.
It's about realizing you have more options than you think you do.
He's a big advocate for continuous learning, isn't he?
Oh, absolutely. He believes financial education is not a one-time thing.
It's not like you learn it once and you're good to go.
You have to stay informed. You have to adapt to the changing market.
He talks about reading books, going to seminars, networking with other investors, basically staying curious and always learning.
Yeah, he's a firm believer in lifelong learning.
And he keeps coming back to the importance of finding a mentor, someone who's already achieved what you want to achieve.
Because they can provide guidance, support, and shortcuts that you might not discover on your own.
He shares his own experiences of learning from his rich dad, who taught him about business and investing in a way that school never could.
It's not about expecting handouts. It's about being a good student and being willing to put in the work to learn from someone who's already been there.
Now, another key takeaway from the book is developing your sales and marketing skills.
He argues that no matter what business or investment you pursue, the ability to sell and market your ideas is absolutely crucial.
It's about persuading people to see the value in what you're offering.
He stresses that these are skills you can learn, regardless of your personality. You don't have to be a naturally outgoing person to be good at sales and marketing.
He encourages people to study successful salespeople, learn their techniques, and practice those skills.
Because they're essential for building wealth.
Now, one of the more controversial aspects of Rich Dad, Poor Dad is his view on working for a corporation.
Right. He argues that while a job can provide stability, it's not the path to building real wealth.
He says that the corporate structure is often designed to benefit the owners and investors, not the employees.
And he points out how the tax code often favors businesses and investors over wage earners.
Now, it might sound like he's against working for a company, but that's not really what he's saying.
His point is that relying solely on a job for your income can limit your potential.
He wants people to develop an entrepreneurial mindset, even if they're working for someone else.
To explore different avenues for creating wealth.
And it all comes back to having a vision for your future, doesn't it?
He's a big believer in that. He says you have to know what you want to achieve, you have to write down your goals, and you have to believe in your ability to make them happen.
It's about having that clarity and that drive to keep moving forward.
He also talks about the importance of managing your time effectively.
Because time is a finite resource, right?
Exactly. And he encourages people to prioritize their time, focus on the things that are most important, and learn to delegate tasks that can be done by others.
And to find work that you enjoy, work that aligns with your passions. He's a big believer in finding work that doesn't feel like work.
Yeah, life's too short to be miserable in your job, even if it pays well.
Now, one of the most powerful messages in Rich Dad, Poor Dad is the importance of giving back.
He talks about how generosity attracts abundance, that it creates a positive cycle of giving and receiving.
And he emphasizes that giving isn't just about money. It can also be about sharing your time, your knowledge, your skills.
And he shares a lot of stories about how his own generosity has come back to him in unexpected ways.
It's that idea that the more you give, the more you receive.
Exactly. But he also stresses that giving should be genuine, shouldn't be motivated by selfish reasons,
It's about having a sincere desire to help others.
and recognizing that our actions have a ripple effect.
That's a powerful message. And it ties into that overall theme of Rich Dad, Poor Dad, which is about taking control of your life and creating a life of abundance and meaning.
It's about defining your own success.
And it's a book that really challenges you to think differently about money, work, and life in general.
Even if you don't agree with everything Kiyosaki says, it can spark some really valuable conversations and encourage people to be more proactive in shaping their financial future.
Absolutely.
We've covered a lot of ground here, going over some of the main points from Rich Dad, Poor Dad, from the basic stuff like assets and liabilities to the more, philosophical stuff about mindset and personal growth.
Yeah, I think it's been a pretty comprehensive deep dive into the book.
I think so too.
Great. Now, before we wrap things up, I wanted to mention something Kiyosaki brings up near the end of the book, his definition of wealth.
Yeah, he has a really interesting take on that.
He argues that wealth isn't just about how much money you have, it's about how long you could survive financially if you stopped working today.
So it's not about your net worth, it's about your financial sustainability.
He calls it your wealth number, basically how many days you could cover your expenses with your current assets and passive income.
It's a much more concrete way to think about wealth.
It's not about keeping up with the Joneses or having a fancy car. It's about having that financial security to live the life you want without being dependent on a job.
It's about freedom and choice.
Exactly. So the question isn't how much money do I have? It's how long could my money sustain me?
And that's a question that everyone should be asking themselves, regardless of their current financial situation.
That's such a good point. I'm definitely going to be thinking about my own wealth number after this.
Me too. It really puts things in perspective. It shifts the focus from just accumulating stuff to building true financial freedom.
All right, so that's our deep dive into Rich Dad, Poor Dad. We hope you found it helpful and thought-provoking.
And if you haven't read the book, we highly recommend checking it out.
It's definitely worth a read.
And join us next time for another deep dive into a fascinating topic.
Until then, keep learning, keep growing, and keep diving deep. Okay, so we've gone through a ton of Kiyosaki's ideas from, the basics of assets and liabilities to that whole thing about minding your own business.
It's a pretty packed book.
It is, but one thing that really got me thinking was how Rich Dad, Poor Dad kind of redefines what wealth really means.
It's not just about how much money you've got in the bank.
Right, exactly. It's more about how financially solid you are, how resilient. He asks this question that really makes you think. If your income just stopped today, how long could you actually survive?
That's a powerful question. Kiyosaki says that true wealth is about how well you can survive financially, and he calls it your wealth number.
So it's not about having a big house or a fancy car. It's about how many days, weeks, even months you could keep things going with your assets and your passive income.
Yeah, it's a measure of how free you are from needing that paycheck every single month. It's a totally different way of looking at things than just comparing what you own to what you owe.
Definitely. You could look rich on paper, but if you're spending more than you bring in and you have no passive income coming in, your wealth number could be really low.
Absolutely. And Rich Dad, Poor Dad really pushes the idea that building up a high wealth number requires you to change how you think about money. It's not about making more and spending more.
It's about getting those assets that are working for you even when you aren't.
Exactly.
So things like rental properties or stocks that pay dividends or having your own business that's bringing in cash flow, those all add to your wealth number.
Those are the things, along with, a solid financial education. That's what Kiyosaki considers the foundation of real wealth.
And speaking of that financial education, he doesn't let up on the idea that it's got to be an ongoing thing, right?
Oh, he's totally adamant about that. Rich Dad, Poor Dad is just the beginning. It's not a one-time fix. He tells readers to never stop learning. Go to seminars, read all the books you can, talk to other investors, always be learning.
He even says sometimes the best investment you can make is in your own financial education.
That's a big theme for him, taking control of your own financial knowledge, not depending on, like, financial advisors or experts to do it for you.
Which brings us back to that whole mind your own business thing. It's not just a catchy phrase, it's really important to him.
Mind your own business really means focus on building up those assets, even if it's just a side hustle or a small investment to start with.
It's about building up multiple streams of income so you're not relying on just your job.
It gives you more options and more control.
Makes you less stuck in that rat race. But I think a lot of people might hear all this and be scared to even start. Like, what if I mess up? What if I fail?
Well, Kiyosaki talks about that directly. He says fear, especially being afraid to fail, is one of the biggest things holding people back from success, especially with money.
He even says something like, failure is just part of the process. The rich learn from their mistakes. The poor let those mistakes stop them.
And he uses his own life as an example. He talks about things he tried that didn't work out, but ended up teaching him valuable lessons. He wants readers to think of failure as, like, a stepping stone.
So not avoiding failure, but using it to get better.
Exactly. He even suggests that people ask themselves, what's the worst that could happen?
Yeah.
And usually when you really think about it, even if things don't go perfectly, you can usually recover and learn from it.
That's a good way to look at it.
It's about being smart and taking calculated risks. And that all ties back to his idea of building up your financial intelligence. The more you know about money, the more confident you'll feel making decisions, even when there's some risk involved.
And he's not just talking about the technical stuff like investing or accounting. He also talks about your emotions, right?
Oh, absolutely. He says that learning to manage your emotions, especially fear and greed, is super important when you're dealing with money.
Don't let your feelings make your decisions for you.
Right. He uses the analogy of a surfer who's waiting for the perfect wave. They're not just jumping in all willy-nilly. They're patient, they watch the market, and they don't let their emotions make them do something stupid.
Now, I know that Rich Dad, Poor Dad has people who don't like it, people who disagree with some of the things Kiyosaki says, especially his ideas about corporations and taxes.
Yeah, those are definitely some of the more controversial parts of the book. But we should be clear that he's not telling people to do illegal things, to evade taxes. He's just pointing out that the tax code is really complicated, and if you understand it, you can use it in a way that benefits you.
So he's not saying to cheat the system, but to learn the system.
Exactly. He wants readers to learn about those strategies and talk to, like, tax professionals, make sure they're doing everything legally.
You know, when it comes down to it, I think Rich Dad, Poor Dad is all about empowering people.
Yeah, it's about taking charge of your own financial future, not waiting for someone else to do it for you.
It's about understanding money and building a life where you have more choices.
And even if you don't agree with everything Kiyosaki says, the book gets people talking about these things, questioning how they think about money and success.
Absolutely. So for anyone listening, if you haven't read Rich Dad, Poor Dad, I'd say go check it out. And if you have read it, it's worth reading again. See what you think now.
And be sure to join us next time. We'll be diving into another great topic.
Until then, keep learning, keep growing, and keep diving deep.